The mispricing in the space goes away very fast.
So the way I see this space is that you have to be having high conviction. We are also not very deep value investors. We don't just buy value for value's sake.
So how do you plan the valuation coverage in your portfolio?
So in terms of valuations, we are very valuation conscious. The company may be having strong margins, but if that is not translating into cash flows, it may not be very sustainable. If we believe that the valuations are running ahead of the fundamentals, we try to reduce our positions or exit.
Hi everyone, welcome to the 8th episode of Fundamentals. Let's talk about a space where the information flow of companies is very swift, prices move very fast, and quality is not a concern at all. Yes, we are talking about large caps, and this fund manager manages this space very well by being nimble and at the same time does not shy away from taking high conviction positions. I'm so looking forward to speak to Mr. Abhinav Sharma, fund manager of Tata Large Cap Fund. Hi Abhinav. So as we spoke, the mispricing in this space goes away very fast. So how do you look at creating alpha in this space? How do you plan sector coverage or taking underweight positions in stocks?
Yes, you are right. Of course, mispricing in this sector is less as compared to if you, let's say, compare with a mid cap or a small cap space.
Yeah.
So the way I see this space is that you have to be having high conviction in whatever calls you take. You take high conviction bets and hold them for a long period of time. Then only you will be able to create alpha. Because if you are clear on why you are buying a stock or a sector and where you see the trajectory over the next 2 to 3 years, you are able to take high conviction bets, and in that case you are able to maybe ride with the company's growth prospects also.
But if you were to take, let's say, overweight or underweight positions, specific positions in sectors, a large overweight or a large underweight, and if the direction goes right or the calls go right, then the alpha would be much higher in that case. So wouldn't you want to do that?
Yeah, of course. So that's what I meant when I say that you take high conviction positions. When I mean high conviction, it means that we go highly over
At the sector level also, okay.
on the sector level as well as on the company level as well.
And how do you build weights? Do you build it over a period or do you build it at one go?
So it depends. It depends on how comfortable we are with the price and valuations. So if we think that pricing or the valuation is close to bottom and the sector is at a turnaround, or we see that the sector is having a long growth runway, then we may look to build the position in one go. But if we believe that there is still some time for the sector to say turn around, or the valuations are still at a higher end, then we may start slowly and then build position during corrections.
So is this a top-down lens totally? Or do you also deploy a bottom-up approach in Tata Large Cap Fund?
So I will say it's a combination of both. So of course there is a top-down view which we have on the Indian economy, also on the sectors which are comprising of this space. So once we take a top-down view, then the bottom-up part it comes into the picture. So it's a combination of both, and it also depends on sector to sector. Sometimes one sector may be more bottom up, while on the other there may be a more top down call as well.
So let's say if a lot of sectors have run up, overall the markets have run up, in that case, how do you make use of sector rotation? There'll still be some pockets. So how do you bring that together?
No, you're right. So valuations are expensive in the market. If you look at across sectors, if you compare especially with historical context, valuations are expensive, but at the same time there is always value available at somewhere, some pockets in the market, and we try to capture that. But we are also not very deep value investors, so we don't just buy value for value's sake unless we don't see any triggers which will help realize that value over the next 1 to 2 years. We would ideally stay away from that space. So yes, we are looking at sector rotation. And while doing sector rotation, we are conscious of the fact that we are just not going by cheapest is the best, not by that approach. But we also look at whether that value is getting realized or not. So that is an overriding factor when we look at sector rotation.
We saw recently that at some points in time, earlier also in history, that sector leading growth does not fall that much even in a market correction phase. So yes, it's expensive, but because it is sector leading growth, it maybe is not impacted. So how do you plan the valuation coverage in your portfolio? Is it very, very disciplined, sticking to GAAP, or you are okay to take 20-30% of the portfolio towards expensive stocks, sector leading growth?
No, so in terms of valuations, we are very valuation conscious. So we always look at stocks where we find that the valuation is in line with whatever growth prospects the sector or the company may have. And of course, markets will always not be linear, so they will try to extrapolate the current trends maybe to more than what it's possible. So we try to get out of those themes or stocks when we feel that the valuations have kind of disconnected from what is actually possible. So that's our approach. And of course, it's not, it doesn't happen in one go. But yes, that's our idea, that if we believe that the valuations are running ahead of the fundamentals, we try to reduce our positions or exit.
And from your perspective, coming to the specific stocks or the stock selection piece, what is more important for you and what do you look at? Revenue growth, top line growth, margin improvement, or overall profit pool of the sector? How big is it? What is the runway? What is it that you look at?
See, again, I will say it's a combination of everything. So you look at what's the revenue potential for the sector, for the company, what's the actual positioning of the company within the sector. So, first the sector comes, what kind of growth runway is there for the sector, what is the profit pool available. Then you look at the company's positioning within the sector, what is their competitive advantage, what if any, are there any moats available. Then you come next to the margins, of course. What kind of margin trajectory you see, and which is a factor of competitive intensity. Also some regulatory stuff may come every now and then. You also look at balance sheet and cash flows, yes, of course, because we believe that balance sheet and cash flow are also equally important. So the company may be having strong margins, but if that is not translating into cash flows, it may not be very sustainable. So we look at it a combination of everything. And finally, you look at the valuations, because at the end of the day, even if everything is very good, the company is growing very fast, cash flows are very good, but if the price you are paying is very high, it may lead to mediocre return in the medium term. So a combination of all these is what helps us in making the portfolio.
If it is sitting at the cusp of something and you like it,
Yes.
you would take it.
Yes.
Yeah. So happy selling Tara Large Cap Fund. This is one fund where the fund manager takes sharp overweight, underweight calls on sectors and stocks both, and navigates the space very well by being nimble, because the space is very fast moving. So thank you everyone, and happy selling Tara Large Cap Fund.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.